Please welcome the founder and senior managing director of Certares, Greg O'Hara, in conversation with Skift founder and CEO, Rafat Ali.
Good morning, folks, or good afternoon, wherever you are. I'm excited to be part of this and interviewing Greg, who I've admired for a long time from the sidelines. Greg, this is your first appearance at a Skift show, and it's not, it's purely our fault, but thank you for being here. One of the things that I do pretty much every month is I check your website's list of investments, because you quietly put things in there, and then it turns out, oh wow, they've been really, really active over the last year and a half or year, certainly through this pandemic. I think I talked to you maybe February or March, right when the pandemic was starting, and it may have been your last few days in the office there. And I think I forget the conversation, but I'm sure a lot has happened since then. And so you've done a bunch of investments. Certares is probably the only specialist travel investment / owner firm, which always is a surprise to me of why that is. And so it would seem counterintuitive that a firm would be investing in travel in these times, and especially at the level that you are. What's the thesis that you're using? I know everybody has a view on whether they should use a thesis or not use a thesis. So I'm just wanted to start with asking, what's your thesis of how you're looking at the world of travel as you're looking at these investments?
Sure. First of all, thanks for inviting me. It is great to be able to speak to people and speak to you during these times. It's been difficult for the last year. Just a couple corrections. I've been in the office other than the first kind of 60 days. We go in every day, and I'm actually not in today, which is unusual, mostly because I'm traveling for business later on tonight, and had to do some things with my family. But in answer to your question, I think the first thing is at the center of every crisis, there's an industry that's easily identifiable. So the last crisis, the global financial crisis, it was pretty easy to figure out that banks were at the center of it, right? And if you had good intelligence and understood which banks were going to make it through the crisis and which banks were going to fail, you could make a lot of money as an investor. And I think I might have mentioned this to you in any of our interactions before, but if we had gone in and bought JP Morgan or Goldman Sachs stock in 2009, we might have made 10 times our money or better. And so, or Citi for that matter. All you had to do was really pick who was going to make it and who isn't. It would be difficult to argue that travel, hospitality, and leisure industry are not at the center of this crisis. It's the most disconnection. Everybody on the phone who's interested in this is experiencing some kind of pain in some way. There are some businesses that are performing better in the pandemic than performed in 2019. Not nearly enough of them, but there are all kinds of businesses that are doing well. And so the job of investing right now, actually, Rafat, is the easiest job I've ever had, because all you have to do is figure out who's going to come out the other side of this on a recovery basis. And you can look at a good business with a bad balance sheet and fix that balance sheet relatively quickly and easily. Steve was just like, kayak's not for sale, but Steve is one of the better managers in the industry, and who wouldn't want to give Steve enough capital to grow during the pandemic and prosper, right? It's easy to do. And then as far as the specialist firm goes, I'd say that, when I left JP Morgan, I looked around and said, okay, like, what am I qualified to do? I could be a financial investor. I could be a travel investor. I could be a fintech investor, a biotech investor. And when you start your own firm now, and for anyone out there who's thinking of being an investor, being a generalist is really hard to do, because the big guys like Blackstone and KKR, who are generalists, they're going to attract all the capital. So you have to find an area of specialists. The travel industry has a TAM of about $7 trillion and is about 11% of global GDP. So if you're a big pension fund investor and you want to track GDP because you have to provide real returns, not having exposure to that sector is tough, right? You know, you hope it grows, but you got to have some exposure to the sector. And because it requires expertise to do, you typically invest in specialists like medical devices, right? You don't let generalists do that. So when I looked around, I said, okay, there's a $7 trillion TAM. Who's the specialist investors? And if you back out real estate, that looks like a $4 trillion TAM, right? Biotech or fintech, for instance, has $2 or $3 trillion of TAM and has thousands of specialists. So it wasn't hard to decide to be the only investor in this space. And since the pandemic started, we've been in business now for 9 years. And we've raised more money in the last year to put out than we did in the previous 8, right?
It's a function of just the availability of money being easier, plus the fact that you have a track record and that the things are relatively cheap.
Yeah, well, things are not cheap. That's a misnomer. Like if you look,
the public market, suddenly there's a disconnect between what the public market and private is, right? Correct?
Yeah, sometimes, but the private guys aren't stupid. You know, if you want to buy something right now from a reasonably large private guy, they know what the public comps are, and they show you the public comps, right? You know, if I wanted to buy Skift, you'd show me a bunch of public comps, and you'd ask me to pay that price. There's a couple of opportunities. So we have basically a permanent capital vehicle that can invest alongside families and strategics for an unlimited duration, right? And that's the big flagship vehicle. Since then, we also have a distressed fund that we've been providing capital to. And some of the deals you've seen, like Azul and LATAM, have come out of that distressed fund. And then we're just in the process of raising a real estate fund. And so, we'll have those 3 products and probably a few more coming.
So that real estate focus would be hospitality primarily?
Yeah, just hotels. So we have a gentleman that we've hired, Nolan Hecht, who comes from Square Mile, and he's the head of our real estate fund. He does a great job. He's got a long pedigree in buying hotels, and you should see, you heard it here first, that we'll close our first deal in the next couple of weeks for a hotel. And then
the editorial team, I'm guessing you're hearing this and will write something.
There you go. Yeah, I'm sure you'll get Nolan. I apologize if you get calls from Skift after this. And so we're going to be active, and we're going to continue to be active. We bought some interesting stuff. Probably people are most focused on TripAdvisor, where we put in $325 million right in the teeth of the crisis last year. We think they've got an excellent management team.
What does it reinvent as?
So what's interesting, and this is, I have to be careful because it's a public company, right? Yeah. So I apologize that I can't be as detailed as I want. But there's been a bunch of research written about the company, so I'm happy to do that. If you think about it, TripAdvisor has 460 million uniques, right? And they come there showing their intent and demand, and they discover what they'd like to do, right? So they go and they talk about everything from, does this particular bag fit underneath my train seat between Zurich and Samaden, all the way to what's the best hotel to stay at or the best rental car company. And so monetizing that information and those 460 million uniques through different value propositions is relatively easy. And so we've worked with management to provide a different underwriting, right, for the company. And I think you'll see us offering more value to the 460 million people that come there every month.
So Greg, you're probably seeing this thing on the right-hand side. It was a poll that we did with the audience. Will SPACs and the liquidity they provide determine who emerges strongest post-pandemic? We'll come to SPAC in a bit because you have a SPAC, and we'll come to the audience is sort of split between is just a vehicle versus it's a real option for a lot of travel companies. Okay, can we get okay? So and you've invested. You were mentioning Azul and LATAM, which again, airlines in Latin America is a pretty counterintuitive bet. My question is why those, but also what data are you looking at all across travel? Like, what sources do you have, or how are you thinking about data that gives you the signals that this is a good bet?
So we're, taken as a whole, we probably sell as much travel as any strategic if you take all the portfolio companies and put them together.
Amex Travel Leaders, all the others.
Amex, Travel Leaders, TripAdvisor, like if you add them all up, AMA, Waterways, everybody, we'd probably be, if we're not the biggest, we're one of the biggest travel companies in the world. But we're in a lot of diverse businesses that other people aren't in. Like there's nobody who kind of has cruise lines and hotels and airlines, and it harkens back to the days of the 70s if you look at those conglomerates. And those companies all work with one another. Oh, sorry about that. Apologize. I'm doing an interview. Thanks. That was my iPad that I needed. Anyway,
you were talking about the data and how you're
so we look across the everything. And so, for instance, if you're talking about the return to business travel, right, we can pull $50 billion of sales at Amex GBT and find out when is Morgan Stanley going back to work, or when is Goldman going back to work, or when is Google going back to work. And so we have pretty good data at figuring out what the return is, to normalcy across business travel. With leisure travel,
the return to normalcy in business travel.
So I can give you what my underwriting is, and then give you give you what my reservations are with that underwriting, if that's what you want. So we're underwriting a recovery of 80% by 2023. That may well prove conservative, Rafat. But that's based on when people are going back to the office, what management teams are telling us about meetings and events, because a lot of business travel revolves around meetings and events. Amex plans, 100,000 meetings a year, right? And so figuring out which internal meetings and which external meetings are going to do. And then my reservation with that is the return to normalcy is going to depend a lot about so all my regression algorithms and whatnot with data all work absent there's a binary switch that gets flicked as to can I go to Italy or can I not go to Italy, established by the Italian government. And when you look at all the data analytics that we're doing, it kind of messes it up when you can, when there's one switch that you can throw on or off. Like no matter whether you're using a quadratic or better, when you start analyzing that data, if someone can just flick a switch, right, where you get a null set coming out of it, you can't really tell anything.
Yeah, and the vagaries of not having a coordinated global response, which was not going to be in the first place anyway. Just nobody thought it was going to be this bad.
Yeah, I think so. So we have all this data, we can examine it. We have data that contraindicates each other, which is always really interesting. When you get, let's say TripAdvisor tells us that the return to normalcy is end of 21, and our polling tells us it's end of 23, right? It's a little bit difficult to figure out which is right, but what ends up happening is as we start comparing that data, we can get a much better answer. I actually prefer it when the data disagrees with each other initially, because when you start looking for how to rationalize that, you end up coming up with a much stronger answer. And so we use that as an investment thesis. So for instance, it's funny that you say it's a contraindicated bet, investing in airlines in Latin America. It's actually not, right? If you look at the demand and intent profile for Latin America, many of the Latin American airlines are operating at more than 100 capacity of 2019, right? And some of that has to do with the summer. Some of that has to do with the cargo business, because if you think about it, Latin America has to fly durables south and perishables north from a cargo perspective. Well, the problem is there's only so many dedicated cargo planes. So if you remove belly cargo of passenger planes, the price of cargo starts to skyrocket, right? And so if you look at the cargo businesses, they're generally up 50% over 19, mostly on the fact of restricted capacity and extra price. So if you know that you're going to have to add belly cargo back. You're going to have to add capacity back. And then you look at the demand curve. We think we knew more than a lot of the Latin American airlines did about the recovery. We were more confident in them recovering quicker than not. Now, we're not a Latin American airline specialist by any stretch of the imagination. And we partnered with Delta, Qatar, and the Cueto family on LATAM. And we partnered with David Neeleman and his management team on Azul. We're not in charge of the ball, but we can be helpful in the way they think about things. And so the management teams have largely, all things being equal, we can generally supply a little bit of special sauce to the management team in terms of insights or demand or intent or relationships. And the management teams end up making their own decisions because we're often not control investors, but we're happy to be in it for the long term. We're happy to work with them.
There are a couple of sectors that have done well in the last year, the short-term rental sector and outdoor related. You can say. You bought a stake or invested in G Adventures, which is an adventure travels tour company. I guess outdoors is part of their business. Would you look at these two quote unquote hot sectors in travel, or? Yeah.
So I think the other place to mention is we invested alongside Barry Sternlick and the Starwood guys, and a team of other investors in a company called Getaway, which is performing, as well as like it's in the high 90s occupancy, Getaway, right? And we gave them expansion capital, and we think that trend won't get reversed, Rafat. We don't think it's pandemic related. We think there's a systemic shift towards some of these things. We saw it happen before the pandemic, and now we're seeing it just be more pronounced. Right. They've got a great management team too, Getaway. We're excited about that one. G Adventures, there's a couple of people in this space. There's Intrepid, there's G Adventures. We like G Adventures. I'm Canadian, so it's close to my heart, and they're based in Canada. We think Bruce Poontip is a great entrepreneur with lots of vision. And a lot of times it's just getting capital is difficult for these guys because they're at a size where these are really growthy investments. They're not, I'm not investing on a multiple of EBITDA basis. I'm investing on an enablement basis. So we go out and we try to make people confident in their ability. And what's interesting is if you think about it, if somebody has extra capital right now, it's almost like putting bait on the hook, right? If Bruce has extra capital and no one else does, that gives them the ability to go make acquisitions and invest in things while other people have to go through cost cuts. And, everything I've bought during every crisis, I've liked after the crisis. Like there's not, everything.
Well, especially for this company, like their revenues are probably close to zero today.
Yeah.
Because it's probably the tour operator has been probably the worst of the worst hit sector in all of travel.
Absolutely.
Group travel is just diametrically opposed to, obviously what's happening right now.
But the recovery for that travel is at the front end of the recovery, because as we measure demand and intent, it's what people are looking to do with their families this summer. There's going to be a lot of domestic travel. If you happen to own a hotel kind of within 2 hours drive of an NFL city it was full last summer, right? These great hotels like Twin Farms and Blackberry Farms, Rafat, even if you called me and said you wanted a room there some weekend, they are really hard to get. Like they are as valuable as anything out there to get. And so they're performing well. But I think the trend of outdoors is on target. I think the trend of active vacations is on target. And I know even myself, I'm taking different vacations than I used to take. I'm not going to sit on a beach anymore. I'm going to mostly because my kids are getting older and they don't want to go sit on a beach, but I'm taking different kinds of vacations.
There's, I think we have a few minutes left, but there's a question that I guess relates to it. Are you looking to invest in sectors heavily dedicated to green and community-focused initiatives? I guess outdoor plays really well into the green / community-focused initiatives.
Yeah. So listen, we're a party to the ESG agreement as an investor. Interestingly, travel is one of the easiest things to get invested as part of that environmental, social responsibility and governance initiative. And so We would love to find more green stuff, and more community focused. We do, in some of our investments, it's really, we make a major investment and then engage the community more than find the community and then make an investment. Right. The green stuff, listen, I think there's awesome opportunities for electrification coming up, right? Everywhere from the airline industry to the rental car industry, the hotel industry. I think there's awesome opportunities, and you're seeing this in the pandemic, right? Before I'll confess, I didn't always put the little card on my pillow saying, don't wash the sheets or don't wash the towels. Now I don't have a choice when I stay in a hotel. Right. Wash the sheets and towels. So I think you'll see that led by a bunch of people. But if we could do everything green over the next little while, or let's say environmentally and socially responsible, if we could do everything in that category, we would. It's very difficult to find things and find experienced managers that want to do that. We don't manage these companies. Somebody else does, right? And so you really have to have a commitment to that, because the worst thing, Rafat, is to say you're green and not be green, right? Like, that's the issue.
On your SPAC, how can we not ask a question about SPAC?
Sure.
Do you have a SPAC called Go Acquisition? I think it's a few $100 million.
It's $575 million.
$575 million. Do you plan? The question from audiences: do you plan a major anchor for your SPAC or diverse portfolio of smaller companies?
Major anchor. So we've been in discussions with a bunch of companies.
I heard Traveloka is going IPO or wants to look at a SPAC. I'm guessing you're speaking to them.
That came out today, and we heard about it today. I don't know if maybe that was reported in the Skift. I haven't read it yet this morning. I've been up early.
I think his interview with the CEO is going to come, I think, right after you. He's speaking.
Okay. Well, give him my number. We have some friends that are invested in that company. I don't know a ton about it because it's a private company. But that would be something that we'd be interested in doing. There aren't very many travel-focused SPACs that are as large as we are, if anybody. My partner, Noam Gottesman, in that deal has a legacy of doing successful SPAC transactions. And so we're looking for some things and again, back to management, we want a great management team. But the Indonesian travel market is specifically attractive. It's just fractionalized in a way that Traveloka can probably take advantage of. And I've been unwilling to hire 12 people that speak Bahasa to go around and figure out how to aggregate that. It's just a long way from home. So Traveloka is probably one of the more attractive.
Question. I promised to ask you this, and you said some very nice things about Skift at another conference, and my team is listening, so I just want them to hear it from you again.
Oh, okay. So I was asked at a competitor. Can we say that? I know you don't have.
Yeah. Doesn't matter.
I was asked at a competitor who I think were managed themselves particularly well during the pandemic, and Skift was one of the. I kind of forgot where I was, to be perfectly honest with you, and Skift was one of the people I called out. Listen, for everybody listening, like having an outlet that is dedicated to reporting on our industry at a time we need reporting, and it's responsible reporting, right? Like it's they're trying to prevent balanced views. Not every story is good, not every story is bad, but it's responsible and it's distributed. And listen, for Rafat and his team, for everybody listening, this year can't have been easy for you, for all of you. And speaking on behalf of myself, the other presenters and the participants in the industry, we thank you for being there. We hope you find different ways for us to support you in the future. And I'm happy to lean in with a shoulder anytime you want us to. We think you've done an excellent job, and we appreciate you being out there every day for us.
All right. Thank you, guys. Thank you for your time.
No problem. Thanks, Rafat.
Thanks.
Bye-bye.